Bitcoin has just begun its run towards new all-time highs. Historically, these runs don't last a calendar year and their price movements are aggressive and exponential by nature. Here are the spectacular Bitcoin price targets for 2021. As discussed in detail in the previous episode of this year-long Bitcoin series, Bitcoin has technically initiated its markup phase towards new all-time highs. And historically speaking, these are short in duration and aggressive in their movements. In 2017, Bitcoin went up by 1,600% in 8 months. In 2013, it rallied by 10,000% in 10 months. But how high can we expect Bitcoin to go this time? Now, that's exactly what we'll discuss in this episode. But before that, not financial advice. I am not a financial advisor and everything I say is my own opinions only. And yes, I am as sick of saying this as you are of hearing it, but if I don't say it, some infantile opportunist might use it against me. And God knows there are many grown-up children out there on the loose these days. And from one plague to another, if you like this episode, then please return the favor by smashing those like and subscribe buttons. Now, normally it's difficult to make predictions in uncharted territory. However, in this case, we will get ourselves some strong price objectives by looking at and eventually merging two different technical angles. I'm very excited about this, so let's get started. This first angle is an observation of my own, and its principle is based on Connie Brown's Fibonacci cluster strategy, in which you draw a lot of fibs and then look for fib confluences. These in turn create zones or fib cluster ranges that you stack on top of each other. And as much as those are helpful, the issue is that you simply don't know how far the price can actually go. For all these boxes tell you is where the expected uncharted resistance levels will be. My approach is simpler and is particularly merited when we compare it to the second metrics, which we'll talk about in a bit. Now, what I've done is basically to mark out the all-time highs and measure them to their very bottoms, as in distribution top to accumulation bottom. In fact, they're exactly the same measures as the huge cup formations we looked at in the previous episode. I then proceed by adding the same box on top of the previous until we reach the next all-time high. When using a log scale, like in this case, it is important that the boxes are made up by the exact same percentage spans. In this case, for example, the measurement from the 2011 accumulation bottom and its previous 2011 distribution top of 1540 is 594%. Thus, each box stacked on top of this base box also measures 594%. So, in this case, it means that the 2013 markup measures two full boxes and some. And this sum is where things get truly interesting. For if we draw a fib from the top of the upper box and to the bottom thereof, the 2013 all-time high perfectly aligns with the fib 1.618 in the third box. So technically, the 2013 markup generated one box plus an additional 1.618 box. Let's move on to the next one. The same principle, measuring the accumulation bottom with the previous distribution top, leaves us with this box. And by stacking them on top of each other, we get these boxes from the 2013 high to the 2017 high. And by drawing an identical fib extension to the previous one, we now see that the price bounced exactly at the 382 in the second box. As you may have noticed, this markup was less significant than that of the first. And this is highly relevant, and the reason why this is relevant is because we cannot expect Bitcoin to continue growing as intensely as it already has. At least not in terms of percentages. 1 billion% in 11 years is a feat of its own, one that will practically be impossible to ever repeat again. That doesn't mean Bitcoin cannot continue to scale. quite the opposite. It just means that its continuous growth shall be expected to slow down. We'll look at just that in a bit. We will also discuss the fundamental reasons behind this in detail throughout this series too. But there's another layer to this too, and that has to do with for how long the markup itself lasts. The 2013 markup lasted for 10 months, whereas the 2017 one only lasted for 8 months. This is relevant as it interferes with the actual price projections, as we are soon about to discover. According to the old Irish myth, leprechauns hide their gold in a pot at the end of the rainbow. And so far, no one is officially known to have found neither the end of a rainbow nor any gold there. But then came Bitcoin, by many referred to as digital gold. And then came the Bitcoin rainbow, which perhaps is as close as we can get to rainbow treasures. You may not find gold in it, physical or digital, but you will find something just as valuable. Someone invented a certain Bitcoin chart, one that was said to be able to predict Bitcoin's future price range movements. This chart has become well renowned for its spooky accuracy. It is called the Bitcoin Rainbow Chart and was discovered already back in 2014. Its principles are simple. You buy when the price is in the dark blue field at the bottom, and you sell whenever Bitcoin trades in the dark red field at the top. Simple as that, and whomever were to have followed its signals would have been royally rewarded. Even starting as late as in 2017 would have generated about 180 times the investment by today instead of the 35x from simply buying and holding throughout the same period. Now, to explain it a bit further, the Bitcoin Rainbow Chart is a logarithmic scale with a rounded price channel that flattens out little by little the further it goes. We can see this by comparing the red zone halving intervals to each other. The first red zone mark is at $143 and the second one is at $6,373 for a 4,350% increase. The third one, however, is at just under 80,000 for a 1,150% increase over the very same time distance. And the final one visualized is at slightly less than $500,000, just 400% higher. So, throughout the graph, the exponential growth has decreased from more than 40x from the first span to just 5x in the last. Yet despite this, the chart still remains exponential throughout. This initial steeper angle goes on to prove that Bitcoin had its most extreme moves early on, which makes perfect sense as less liquidity was required to actually move the price. And that's one of the reasons why the channel flattens out, because the bigger something gets, the more inert it automatically becomes. This chart can best be compared to an oak. Its growth pace in relation to time is greater the smaller it is. The oak's progression is much more exponential from that of an acorn to a plant than it is from a 25-year-old tree to a 50-year-old tree. It still grows, and in factual numbers it grows more and more, but percentually the growth slows down. And in that sense, Bitcoin in 2010 was a strong and game-changing idea the size of an acorn. So, how high then can we expect Bitcoin to go this year until the markup fun is over? For wasn't that the entire purpose of this stupid episode? It sure is, and I won't let you down. Here goes. If we look at the previous two markups, we can identify their respective peaks on the rainbow chart. And not only that, for each accumulation phase has been clearly identified and signaled as well for multiple generous buy opportunities. This naturally follows that the upcoming peak should statistically land us in the red zone. But as always when it comes to probabilities, there are no guarantees. But this is how we'll beautifully tie the rainbow and the boxes together at the very end. Just wait and see. Now, if we assume that this markup won't survive 2021, and for a full explanation of why, please watch the previous Bitcoin series episode in which we discussed the reason for this in detail. Bitcoin's red zone target price will range between $125,000 and $185,000 depending on when it were to occur. The sooner it reaches it, the lower the price. And from the current price levels, this would mean an average price increase of 17 to 60% per month. And that's an accumulated 17 to 60% a month, where 60% per month is if we were to peak already in April and 17% if we were to peak in December. Now, here comes the beautiful part. It's so beautiful, I almost want to cry. So, we have a range of tentative rainbow targets so far, the red zone between $125,000 to $185,000. But as mentioned, technical analysis and the financial markets all come down to probabilities. But the more individual probabilities that align and proclaim the same outcome, the more likely it is to come true. This is why we'll now stuff that rainbow into our boxes. Now, do you recall how the 2013 markup target was equivalent to 1 box plus a fib 1.618 box, and how the second one was 1 box plus a 382 fib of the next? And do you recall how we just talked about how the exponential growth flattens out? Well, given this, as we went from a 1.618 fib to a 382, we may safely conclude that the upcoming box target should shrink. And if we begin by putting a full box into the previous top for a further shrinkage, we end up at $125,000. And as mentioned multiple times, the peak will be dependent on when or how fast it tops out. The sooner it tops out, the lower the ultimate target. In this sense, if the price were to move slower, it will surpass the full box. Let's then take a look at what the 1.618 fib says. And just to be clear, a naked 1.618 on a logarithmic scale is less than a full box plus a 382 fib. I'm not gonna get into how and why, but feel free to experiment yourself on your charts and you'll reach the very same conclusion. And the reason why I bring this up is because our entire point is that the box targets shrink for each market cycle. In this sense, we're left with either a full box target or a 1.618 box. Now, the first whole box said $125,000, just like the first red zone rainbow target. And while the latest December rainbow target is at $185,000, the fib 1.618 reads $189,000. So we have two completely separate types of measurements, and we yet end up in the exact same price range for 2021. In a sense, this should almost qualify for a magic show, but I'm not gonna get that obnoxious. I'm just kidding, I am gonna get obnoxious. Nevertheless, we don't just have one speculative source to obtain our target range, we have two that perfectly align. And the most amazing part is how other technicians have reached the same price range objective, but with other technical measurements in turn. On a final note, as accurate as this rainbow chart has proven to be so far, it may not work ideally in the future. For as always in trading, the more people who catch on to something, the less likely it is to work. And for more on this incredibly interesting topic, please watch this episode, which content-wise happens to be one of my personal favorites so far. That was all for now, thank you and goodbye.